Hey everyone, and welcome. Today, we're diving into something that's frankly a revolutionary way to read the market. It's a method that promises to show you what's really going on behind those price charts, giving you a totally new way of looking at market movements. So let me ask you something right off the bat. Take a look at your trading screen. All those charts you rely on day in and day out, what if they're only telling you like half the story? I mean, think about it. Candlestick charts are amazing, right? We all use them, they show us price action, but they can also hide the real narrative, the story playing out just beneath the surface. And that story, well, it's being written by the institutional players, the so-called big money. All right, so let's start peeling back the layers on this hidden story. Let's really dig into what our traditional charts might be missing. And this really gets to the heart of the problem. Candlesticks, they give you a chapter. But to trade really effectively, you kind of need the whole book, don't you? It's all about moving from just a piece of the story to the bigger, more complete picture that something like market profile theory can give you. And if we want that bigger picture, there is one group we absolutely have to follow. You've heard the term the smart money. This is where all the real clues are hiding. The key idea here is something called institutional accumulation. Now, that sounds a bit fancy, but all it means is that these large funds and banks, they're quietly buying or selling, building up their positions when the market looks like it's doing, well, nothing at all. They work in the quiet moments, getting ready for the noise. Okay, but that's the million-dollar question, isn't it? If this is all happening quietly, behind the scenes, how on earth is a regular trader supposed to spot it before the big move has already happened? Well, the answer is actually found in a really powerful theory from Market Profile that explains the market's natural rhythm. You can think of it like a constant dance between two states, balance and imbalance. Everything, and I mean everything, kicks off with a state of balance. This is the foundation where all the major market moves are built. Now, a balance area, it probably just looks like a boring, sideways market on your chart. You know, the kind of choppy period most traders just tune out. But here's the secret. That's exactly where the institutional players are busy accumulating their positions. They're coiling the spring for the next big move. And after a period of balance, what always follows, you guessed it, imbalance. This is
Good evening, guys. Good evening, everyone. A quick sound check. Am I audible? Can I just get a confirmation? Great. So let's start today's session, and we will cover the gamma density and the gamma exposure chart. And before that, let us just have a look at what the structure is telling us for tomorrow's settlement. So we have the website, VTrender website on screen, and we have this forum section wherein we have all the important reports which are published on a daily basis. So we have the top to bottom approach which we follow at VTrender, and it is very important to know what the bigger time frame is doing, even if we want to trade in the shortest time frame. So we have completed the month of November on Friday. So we have the monthly report and then we have the weekly report as always. Both of these are based on spot because we use spot for the longer time frame references and the analysis. And whereas the volumes are only there available in futures and options, so we do the shorter term analysis, which is the daily report on futures, the Nifty futures and the Bank Nifty futures. So a quick look at what we have done on the monthly time frame in November. So what we did in Nifty spot was form a normal variation profile to the upside. We have the reference, and this was followed by a double distribution profile we had last month. So we had an upside imbalance, and that upside imbalance continued in the month of November. And before it continued, it gave us a test. You can see these lows which we made on 7th of October. The swing low which we left was right where we had the extension handle of the DD profile of the monthly time frame. So if I take you to this monthly chart, you can see this. It was a double distribution profile, and this was the DD zone, the double distribution zone. So what is a DD profile? It is a profile where you have a balance being formed, and from that balance the auction moves away in one direction to another level, and there it formed another balance. So you can see how we had a balance at the lower level, and then we moved away. So this extension handle was at 25330, and you had a zone of singles till this 25,700 and 25,715 level. So this 400 point zone was where we opened the month of November and formed value over there. And when we tested this extension handle of 25330, what we saw in November was a responsive buying tail from 25432 to 25318. 25318 was the low we made, and on the daily we got a initiative buying tail there, and on the higher time frame we could see the uh, test being rejected. So that means the buyers were defending that zone, and from there we went on to form a trend up move where we went on to hit new all-time highs of 26310, and uh, we closed around the highs. So it was a normal variation profile with value being overlapping. And what were the important references which we'll have to take forward for the month of December? We have the rollover point of 26060. It is almost similar to what rollover we had for the November series, which was 26090. So 26060 is our first reference, and then we have the POC of the November monthly profile at 25969, and the series VWAP will be an important one, just like the one we had in October. It was 25501 in October, which was broken, but then it took support at the extension handle. So 25915 is the VWAP of the November series. So these are the three important levels which we will make note of and carry forward for the entire month of December. So this is as far as the Nifty spot is concerned. Let us now move on to the Bank Nifty spot. Bank Nifty also, we have formed a normal variation profile to the upside, and similar thing in Bank Nifty. The lows which we made on 7th, this was testing a zone of singles. Bank Nifty was the more bullish of the two in the month of October. So we had formed a triple distribution trend up profile, and we had completely higher value. The rollover point was mentioned, and the VWAP of that triple distribution profile was at 57124, which we had already mentioned as the swing reference for the rest of the year 2025. So you can see how these lows which we made on 7th stalled right at this VWAP. 57157 I think was the low we made. So you can see how the monthly trend up VWAP was holding, and from there we got an initiative buying tail on the daily, and we went on to form this trending move higher. Yes, it did close in a 2-day balance, but then this test and buyers responding with an initiative tail on the daily time frame was confirmation that the PLR remains to the upside. So what do we look forward for in the month of December? The value has been overlapping to higher, and what we have done is we have left a responsive buying tail. This is that responsive buying tail. The VWAP of the last series remains untouched, so that continues to be an important reference. And then this buying tail is will be the lower reference, and then we have the VWAP, which is also near to the previous month high. So what is it telling? The previous month high was taken out with a kind of an extension handle, and that becomes our support. So 58602 is the VWAP, and 58615 I think was the previous month high. So that will be our swing reference now. it has come up, the swing reference has come up from this 57157 125 to 58602, and then we have the POC at 58937. The rollover point is at 59150, and we have this extension handle at 59440. So 59440, 59150, and 58937, along with the series VWAP of 58602, would be the important references which we will carry forward for the month of December. So 59150 is the rollover point, 58602 is the VWAP, and 58937 is the POC. So this is how we are placed on the monthly time frame. Let us now quickly move on to the weekly report and see what we did on the weekly time frame last week. So as you can see, Nifty spot, if you have been following this weekly report, I think for the last 6 to 8 weeks, we have been forming neutral extreme profiles. There was a phase where I think 4 consecutive neutral extreme profiles we got to the downside. And this one I think is the third where we have got a neutral extreme profile to the upside. So that is telling us that it has been two-way moves all through the last quarter or so. And it has not been an easy directional trade even for a week as such. So what did we do last week? We opened last week above the previous week's value, but we made that dreaded seaside extension, which we did today also in Bank Nifty, and this resulted in a failed auction, and we went on to form a neutral extreme profile, leaving an extension handle. So what we saw was we made an attempt to form higher value. We got rejected back into this weekly value, which was a nice balance. And this triggered the 80% rule. And we almost completed that on Monday at close. But because this was a spike, we had to confirm it the next day. What we did was form value in this spike zone for most part of the day. And again, we saw a failed attempt by the buyers. You can see how J&K made an attempt to probe higher, got rejected, another failed auction got confirmed, and we closed in yet another spike, leaving an extension handle, and we tagged this uh, weekly failed auction. We almost tagged this weekly failed auction. The failed auction, the weekly failed auction was at 25856, and the low we made on Tuesday was 25857. So you can see how failed auctions on all time frames give you very important reference, not just for the trade in one direction, but also it serves as important swing reference when the auction comes back to test it. Because it was not broken, it was telling us that the buyers are still holding this. You can see the next day at open on Wednesday, we did get a free tick below this, but at no point of time we stayed below it. Although the low I think was at 25843, but it was an open drive up. We just swiftly went past this value and also got back above this failed auction, the two failed auctions which we had confirmed. So this was confirming that we are getting initiative buying back into the market. And what it did was it moved away from this weekly value because we formed value above the weekly time frame. So after this, we went on to make new ATH, but then again, what we saw at the new ATH was a failed auction, 26310. And 26310 is not a random number. This was the rollover point of October 2024, which never got tagged in the next month, which was November 2024. And if we can get back to recent series, which was when we started the November series, we had a failed auction in the futures right at that level of 26310. And we narrowly missed tagging it in the first day of the series. I think we made a high of 26284 when the November series started. That was telling us that the failed auction in the futures is still holding. And that what has happened now is in futures it was taken out, but the same level held in spot, and it confirmed a failed auction in spot also. So what we did last week was a close with a 2-day balance, and on the weekly time frame, you can see how we have formed overlapping to higher value with the POC shifting to the top, and we have got a close right around the POC. This 26205 was the POC, and we had a close right at that level on Friday. So this was our important reference, and because this is a prominent POC, this will continue to act as a magnet till the time we do not get a initiate a move away from that level. So that is what happened today. You can see how we have the weekly POC as our first reference. That is what happened. The higher open was right at this objective of 26324, but it was not able to sustain this, and it what it did was it came back into this weekly value and triggered the 80% rule. I'll just open up the weekly chart and we can see what we have done today. So this is so that is the reason we need to be very uh, alert about the higher time frame. You can see how we opened above this highs, but it got rejected. We have got an A period selling tail, and we got back into this weekly value. You can see how this is a well balanced value area zone. In spite of it being a neutral extreme profile on the weekly time frame, you have a well balanced value area zone. So when you get back into a well balanced value area zone, there is a very good chance of doing the 80% rule. So the first objective was this 26205, which we hit, and we went on to make a low of 26125 today, and we have kind of uh, stalled at that level. So we can remain in this value, and the POC of today is at 26177, which will be the opening reference for tomorrow. But this 26205, where you have the gamma zero also, I'll come to the gamma uh, levels in a bit, would be the most important level for tomorrow's settlement. We will have to monitor our tools and see what is happening at the 26200 option inventory, and then accordingly look to trade the moves which we get. So spot, the new highs was rejected, we got back, and this we have formed a trend day down. Yes, we have left a small tail at the lows, and with the POC has shifted to the lower segment, lower distribution. So it does tell us that there could be profit booking, and thus this zone of 26175 205 will be a important one, because this is attracting maximum TPOs over the last 5-6 sessions. So this is regarding the Nifty. Let us now move on to the Bank Nifty spot before we get on to the futures and uh, discuss about how we are placed for tomorrow. So coming to the Bank Nifty weekly report, what we did in Bank Nifty was again form a neutral extreme profile on the upside, and you can see in Bank Nifty also we started on a similar note, made an attempt to move above this value but got rejected, and once that rejection came, you can see how neatly we completed the 80% rule in this weekly value, and we closed in a spike. So this spike was below this value area low. So for us to get accepted below this, we needed confirmation by time. Because this happened in the last TPO of the day, we needed the open to also stay below this and break below this, which did not happen. You can see how the open was around the value area low, but we hardly got any extension lower. So that was telling us that this value is being respected and being built. The auction is still forming value in this zone. But what happened on Wednesday is we got a initiative move away from this value. We not only left a period buying tail in the value area, but we also left a zone of singles. And then we left an extension handle at this high of Monday. So this was telling us now the buyer has gotten, and we need to look for upside. And that is what we did. We went on to make new all-time highs, but then here we saw a 2-day balance being formed. So that is how we were placed in Bank Nifty. And if you look at the weekly chart, you can see how similar to what we saw in Nifty, the POC shifted in the upper part, and this is become a very prominent POC. 59743 is that POC, and that was our reference. Below that we were bearish, and above that we would have been bullish, but we had one reference of 59783, which was the POC from Friday. So daily POC was our reference on the upside, and the weekly POC was the support on the downside. And what did we do today? We opened higher. I'll open up today's chart so that we can quickly go through the Bank Nifty spot, and then we'll move on to what we have to look out for in the futures, tomorrow's settlement. So you can see how Bank Nifty opened higher. It remained above this value area high of last week. So this was a bullish start till the initial balance was done, because we have left an initiative buying tail. Yes, we have a small tail at the top also, but because we were above previous value, we were looking for more upside. But that upside had to come in form of a range extension. But what we instead got was the typical seaside. This was a very marginal new high in the seaside. I think it was just a zero point 0.5 margin was there. And but still, what it told us was the buyer made an attempt and failed. And from failed moves, you get fast move. And that is why we got that failed auction getting confirmed today at a very important level at 6114. And you can see how once we got back into this weekly value, we never got back out. So we have entered this weekly value, triggered the 80% rule on the downside, tagged this prominent POC of 59743, and what we did was complete the 180R objective to the downside. The 180R objective on the downside in the Bank Nifty spot was at 59667. So once we hit that 59667, we took a stall and we have left a buying tail right there. So this is a neutral extreme profile with the POC again shifting around the weekly POC. So you can see how both in Nifty and the Bank Nifty, we are forming a high volume node zone. In Nifty, it is at the 26175-205 level, and in Bank Nifty, it is around this 59700, 59780 zone. So this will continue to act like a magnet till the time we don't get a definite move away. So how will the definite move come? It will come in the form of either a period buying tail or a extension handle later in the day. So till then, any move which we get, and more so if it is on low volumes, you have a very good chance of this magnet being uh, bringing that auction back to that level. So this is about the Bank Nifty spot. Let us now move on to the next report, which is the daily report. And this is where the volumes are, this is where the real action is, and this is where we get the most precise levels to trade out of. So you can see how we had the references. These are all futures level, and how we had the references given in form of business areas. And we'll quickly open up today's chart. And this, because Friday was an inside bar, what we could have done is we could have merged these two profiles, 27th and 28th. So we get a 2-day composite. And what we saw in spot, you can see the same thing happening in futures also. So we had this 2-day balance. In futures, and we opened higher. We opened above this value. But what did this higher open do? We were not able to take this selling tail out. We had a failed auction here. This failed auction is at 26495. This was our reference. We would have been bullish had this failed auction been taken out at the open, at the higher open today. But I'll come to the order flow chart also in a bit. But what we saw was stalling of upside right at this tail. So once that happened and we got back into this value, you had the 80% rule on, and this is the daily time frame. So we completed the 80% rule in the 2-day composite. And what we did later in the day was break this value area low with an extension handle. So that was telling there is more downside to come. And the downside, what was the objective? This VWAP was a very important, because this was a trend day, 2611. So that VWAP got defended, and for now we are holding that. The buyers are holding that trend day VWAP. but it was very clear from the open that once we have got back into this 2-day composite, the uh, imbalance to the upside is not there because the buyers were absent today. So if I quickly get this into a 2-window mode and add the order flow chart, I'll have the 15-minute order flow chart and we will just do a quick revisit to the open. So you can see how the higher open stalled right at this selling tail and we were not able to do much, and instead what we got, this is the value area high of the 2-day composite around that 26465 level, and you can see how at the start in the second bar we have got an RS. So if you are getting a gap up, you want the buyers to seize control. And how will they show whether they are in control? You need to see IB bars, green bars, and you need to stay above the VWAP of the day. But nothing of that sort was happening today. We were getting bars which were showing us red caught, and then we got an RS. We did not get any IB. And once we got back into this value, this RS was our reference. This acted as our stop loss to hold shorts. And what was our target? Our target was this midpoint, the first target, which was around the 26,400 zone, and then this POC of 26,387, the composite POC. So you can see how once we broke that, this RS held. Okay, this RS, which was our reference, you can see how the NPOC never got tagged. And this was telling us that the auction does not wants to move away from this value to the upside. So this was rejected, this was negated, so there was only one direction left, which was to the downside, and we had a nice balanced profile which was waiting for completion of that 80% rule, and we saw that happening. You can see how neatly we completed the 80% rule. We went on to hit that VWAP of 26407, and then later in the day we did get this small pullback in the FTPO, but then we were not able to get back above the VWAP, this. And you can see how this pullback was attracting reds. You can see this bounce which we got was on red caught. So this was telling us that the downside is still not done, and we are looking for a tag of this 26387 and this value area low of 26375. We went on to hit those two levels, and after hitting, we not only hit those two levels, but we left an extension handle. We went on to make lows of 26305, which was tagging this VWAP from 26th of November. And you can see how here the order flow was showing us profit booking coming in. This was an RB 615 green. This does not tell us it is fresh initiative buying which is happening. Why? Because the signal in the order flow is that of an RB, and we continue to probe lower. If this was initiative buying, we would have gotten green bar. This POC would have been in the middle or the lower part, and we would have closed at the highs. So this is how you need to identify the difference between responsive activity and initiative activity. So not LLTs are uh, initiative players. They could be closure of positions also. So that is what it was in this. And when you saw zeros on the sell side at the lows, you know now this is a very clear signal to come out of shorts, book shorts, because it is giving you 3 zeros on the sell side. So rightly we did get a bounce back, and that bounce back went again near VWAP. You can see the first rejection also happened near VWAP in the F, and this, it is not a coincidence that this VWAP and the pullback high which we left in the J and K period was very close to this value area. So what the auction was telling us, it was showing us signs of rejection. It did not want to get back into this value. You can see how it was not wanting to go higher. It got rejected in the probe above the value area high. It got back, completed the 80% rule, broke below, tested one important reference of the VWAP, and then in the bounce, it showed us rejection at that uh, value area high. So if we would have got back into this value, the 2-day value, and seen some IB here, uh, and it would have also meant that we are taking out the day's VWAP. So we could have looked for the 80% rule to the upside. But because here and the order flow was so clear, you can see the number of zeros which we got on the sell side at the lows. You can see the same thing happening on the buy side at VWAP. So you can see how there is no demand at the VWAP, which is telling that the sellers are still in control, and they went on to make new lows. Yes, they were only marginal new lows, not we didn't get a spike as such, and that was more so because we had some stuck reds at the lows. So they could be either stop loss of longs, or they could be shorts, laggard shorts who have entered, but they got stuck. That is the reason the auction stalled on the downside into the close, and what we saw was the POC shifting to the lower segment. So what we have done today is form a trend day down, but the trend day down has shown us the POC shift to 26338. So this will be our reference. Our close is also around the same level. So this will be our opening reference in futures for tomorrow's settlement. And in spot, we have already discussed that HVN zone of 26175 to 26205. So we will have to look at this and see what the order flow shows us tomorrow at this reference. And yes, of course, because this was a trend day down, this VWAP, which is also very close to this 2-day value area low, would be the upper reference. So this is what has happened in the Nifty futures. Now let us move on to the gamma density and the gamma exposure tools for tomorrow, because those will be the most important charts you would want to look at and take cues of what we can expect for tomorrow. So I have the 2-window mode of a gamma exposure chart. We have the gamma exposure at open on the left and the latest. So how this combination helps us is we can see how the option inventory was placed in the morning and how it has changed during the day. So what started as a short gamma at 26,200, and this was short gamma because we were near 26,200 spot, but it changed. The higher open would have changed inventory, but slowly what we saw was this 26,200 short gamma became long gamma, and the uh, ratio kept increasing higher. So right now what we have in the gamma exposure is long gamma for 26,300 as well as 26,200. So long gamma is the option inventory is more on the long side at that level. Short gamma is where the option inventory is more, there are more option sellers at that level, so you can expect that level to hold. So we have to compare the reference which we are getting uh, along with whether it is a short gamma. If it is short gamma, that means the red is above the green, the level it is pointing to, you can look to short those straddle, or you can short a strangle out of money, one strike out of money. But because here the green is above the red, this is long gamma market. So it could be, the combination could be anything. We don't have the exact OI of how much of long interest is there in 26,200, how much a short interest is there in 26,200 put or call. But then this is a good enough indicator to tell us how the market is positioned and how the writers would be positioned. In a long gamma market, you would not want to be a option writer, and you would want to make use of the fast quick moves you get in both directions, and we have the tools to take advantage of this. And if tomorrow while closing, you can see now how you have got a 2 peak structure, so that definitely there is no no confirmation of a pin level as of now. But yes, tomorrow as we open and we progress during the day, we will have to monitor this, and we will have to see whether this 2 peak structure and whether this long gamma turns into a short gamma. If you get a single peak at 26,200, which we have already identified in using the spot chart, you and this red gets above green and it keeps going higher, and this ratio also keeps increasing because tomorrow is settlement. You can see this going to 1.5. So if that is happening, then you will know that the option inventory is getting into short side trades. So that is what we will have to look out for. So we as of now, the structure looks long gamma 26,200. So because we are below 26,200 spot, we are looking at uh, what the spot will do below it. Once we get back about 26,200 in spot, you can see this information changing, and that we will have to monitor tomorrow and see how it changes. And if for by any chance we are getting a move higher, then we will have to see if this long gamma gets affected and if there is any increase in the short gamma in at that level. As of now, 26,200 short gamma is lower than the long gamma. If we stay above 26,200, or if uh, the auction moves in one direction, you will definitely see changes happening in this inventory. And regarding the zone, regarding the range, apart from what we have seen in the spot chart, we have this gamma density chart. So gamma density chart is a very useful tool, especially for the settlement day, because this tells us how the option inventory is placed for a close for the settlement. So as of now, both these peaks, the convexity and the density, are pointing to 26,200, and the spot is closed around that level. So we will have to again monitor this. But why we are not sure about the pinned effect is we don't have short gamma confirmation at that level. We saw the gamma exposure chart and it is showing us 26,200 still has long gamma. So although the peaks are in place, both of them are at the 26,200, but we will also have need to get that confirmation that short gamma is, the red is above the green in the gamma exposure chart. Then we could maybe see inventory building up for a 26,200 close for tomorrow's settlement. And what could be the range? We have the 1 sigma range on the downside at 26050. This is also coinciding with our rollover point. So this will be the support if we move lower from that 26,175 zone. On the upside, 26,350 is the 1 sigma on the higher side. If we move higher, then we'll have to look at this as a probable target, and according to this we will have to look at trading the setups and also see what the gamma exposure is doing, with inventory definitely changing hands at the 26,300 strike price. So this is the sigma zone, 26,350, 26,050. If we are in for a 3 sigma day, so the lower reference below 26,250 on the downside would be that 25,850, which is again coinciding with that weekly failed auction which we discussed while watching the weekly report. And you saw how we took support right at that level. So that will be the lower tail. That will be the 3 sigma target, which is a rare case, but it is not unheard of. It happens many times. Whereas on the upside, if you are able to get above this 1 sigma of 26350, then the upper reference is at 26550. So these are the uh, range. This is the range, entire range for tomorrow, and we will have to see after the open how we are placed. Yes, I'll open up the VolumeX chart of today and we'll see what that showed. So VolumeX is also going to be a very important tool for tomorrow. And you can see, I'll just go to the chart of today, and you can see after the gap up where both the call and the put lines were together, they were almost holding on to each other. This is the place where the put moved away. And then, yes, they were parallel till this time, but here you got the spike. We had that session last week on NTM volume X, and we had discussed how these spikes give you an important cue. And this spike, if you note down the time, you can see at 10:15, once the initial balance was over, it was more in favor of downside. Although the move was not very fast, it took time and the extension happened in the D period only, but it was a very clear extension. And here you can see that 45-degree playing out in the CE volume X chart. You can see how this is flat and this continues to rise. So this is telling us that yes, this is, you're looking for more long side trades in the put, and here again you get this swipe. This was a fresh entry into the down move. So you can see how the call volume X went in the opposite direction. So these are the opportunities you want to look out for. Apart from what we see in the structure, the volume X will definitely give you real time information about when the imbalance is, a fresh imbalance is starting. And then we went on to probe higher, and then you can see this dip where we got that retracement, but at no point of time you saw any crossover happening. So that is why after they came closer, again this swipe was telling you that you're headed for new lows. This was the pullback high we made in the J, where this came close to each other, and you can see this swipe higher, and we took off this highs for the day and went on to make new highs for the day. So this volume X chart will definitely be an important tool for tomorrow. And tomorrow being the settlement, you will see there is a chance of seeing lot of crossovers happening, because the writers will keep getting invited and most of the laggard writers will get hit. So you need to be prepared and you need to be very swift while in using this. Today it was one-way traffic after the rejection above the 2-day value. We only had the put volume X above the call volume X. Yes, we did get 2-3 opportunities where we got the swipe and fresh entries into the down move, but uh, otherwise there was no crossover as such. But on settlement days, we have seen in the previous settlements that you will get writers get attracted on both sides and they get hit also on both sides. So uh, you need to be very sure that you are not a laggard when you are writing options. And we have the tools which identifies that where there is a laggard move happening and which is an initiative move happening. So using that, we will be able to take the higher probability setups. So that is it for today from my side, guys. Let's see how the settlement plays out. 26,175, 26,205 is the zone to watch in spot, and 26 320 330 is the POC, where the closing POC of today in Nifty futures, which will be the opening reference for tomorrow. And we will have to watch out for how the option inventory plays up. Make sure you have the density, gamma density chart and the exposure chart open. See whether it is short gamma or long gamma. As long as you have long gamma, you cannot be comfortable writing options, and you will have to be ready for two-way moves if you are seeing 2 or 3 peaks in the gamma exposure chart. The gamma density chart, if you have the convexity and density both pointing and the cone keeps getting more and more steeper, you know that there can be a pin effect for the expiry, but that will also need the confirmation from the gamma exposure chart of that particular level being short gamma, and it needs to keep increasing. The ratio needs to keep increasing, and the short gamma needs to keep going higher, much above than the long gamma. So that hopefully this session would be useful for the guys who have attended, and for those who would be viewing the videos later in the day, and you're able to make use of these tools. The idea is to use these tools to get better at trading the intraday markets, where there are a lot of opportunities, but you also need to make sure that you don't get stuck in the wrong direction. So that is why these tools will help you to stay with the right bias as long as the auction is in that direction. And if there is any change, it immediately alerts you. So thank you guys for joining in, and have a great evening, and wishing all of you a great settlement tomorrow. For any queries, you can DM me on X or you can WhatsApp me. My WhatsApp number is 90362 79747, and Atuttam Goel is my Twitter ID.